Hello, everyone, and welcome to Chartwise Women with Erin Swenlin and Mary Ellen McGonagle. Welcome to this Thursday, February 11th, Chartwise Women Show. Mary Ellen and I are here to educate, engage, and most importantly, we want to empower you to take control of your investments. Nobody cares about your money more than you do. So we want to help you with how to get involved in the market and take advantage of the outperformance and growth that's out there. All right, Mary Ellen, so how are you doing? Keeping warm?
Yeah, it's really been lovely here. I'm saying it's been 70 and sunny. I feel like I can talk about it. There's not a lot of big snowstorms going on back east this week,
I know,
but
right?
yeah, it's been just quite lovely and very
Yeah,
doable.
it's gotten so cold here. I don't like walking around. My hands are always cold. I live in Southern
Well,
California. This shouldn't happen.
well, you're up in the mountains. No,
Yeah,
not quite, but
practically up in the hills. All
okay.
right. Well, since we're talking about the temperature,
Yeah.
this week's theme is about reading the market temperature. And, what we do in preparation for our show and when we write is to go through, and of course, we want to know where the outperformance, where the strength is, and just get an overall read on what the market itself is doing. Because clearly, when the market is, we watched it in March, when the market is heading down a vortex of a bear market, it will take everybody with it. So you need to be aware if the market is looking soft or if it's looking strong, because that will improve your confidence level in what you invest in. So that's what we're going to talk about today, is some of the ways that Mary Ellen and I read the market temperature. So let's go ahead and move right into our wisdom of the week. And I will start with mine. I like to look at participation, and I'll discuss this a little bit more later. But I think participation in the market really reveals whether the market is hot or cold. You can just tell by how many people are participating in those moves to the upside and the downside. So that's one of the ways that I like to look at whether the market is hot or cold or is getting ready to change its temperature.
Yeah, and mine is talking about when the markets are what are called overheated. We're certainly feeling a bit frothy here with the markets, and you want to make sure that we're not too heated before putting new money to work. And I'll share some ways that you can capitalize and figure that out so that you can have a better feel for whether you should go all in or perhaps wait for the markets to come in a little.
There you are. Yeah, I always like to list my exposure to the markets when I do my Decision Point Diamonds reports, because we're all kind of in it together. And then you can see, really, I don't give you my whole portfolio, but I can tell you right now I'm about 80% exposed. So you want to, change that exposure as well when you determine where the market might be headed. All right, well, let's go ahead and move along here and talk about our favorite thermometers. I kind of alluded to mine, so I'm going to go ahead and start and talk a little bit about what I do with participation, and then I'm going to hand it to you, Mary Ellen, and you can talk about some of your favorite thermometers and how you read the market.
Sure.
All right, so I'm going to start off. Participation, I consider really looking at the number of people that are involved in a move. Okay. So some of the ways you can do that is to mark participation, to see how many stocks are actually contributing to what's going on in the market. That's your participation, how many are contributing to what's going on. So, for example, this is the NASDAQ. Here is your price chart. You can see everything going up nicely. And what we want to do is measure this participation by how many stocks have their price above their 20-day EMA, their 50-day EMA, and their 200-day EMA. It works out nicely. This is your short-term, intermediate term, and long-term participation. And some of the things you want to watch for are, of course, we always talk about overbought and oversold. Those are usually where you're going to see those market turns. But we also like to look at divergences in participation. So for example, back here, you can see that price was rising, This was an okay. We didn't really have a negative divergence there, but negative divergence in the intermediate term, negative divergence in the short term, and it pretty much called that reversal in the market. So that's why I would like to pay attention. So what's going on right now in the market as far as temperature? Well, again, this is the NASDAQ, and I've added the labels here so you can see those percentages. Right now, in the very short term, if you're looking at the short-term participation, almost 87% of the members of the NASDAQ have their price above the 20-day EMA. And you know, when we look at stocks, we're always paying attention to the support and resistance of the 20-day EMA. So we really want to see these stocks holding that particular support at the 20-day EMA. We have 87%. That's good, right? It's telling you that we're getting participation right now. It has been moving upward with price, so we like to see that. The issue becomes these overbought conditions. And right now, these readings are quite overbought. I'm going to show you one more chart, and then I'm going to let you take it away, Mary Ellen, with one of your ways that you like to look at your charts. So this is the one that I look at pretty much every day. Actually, let's get the short-term version. This is the SPY, and this is the same information. I put the short term on the top, though, on this particular chart, so hopefully it doesn't confuse anybody. But you can see that price above 20, 50, 200. Currently, we're seeing, you know, I had a little bit of a problem because, you know, you can see that negative divergence in the intermediate term on participation. But we really alleviated in the short term some of those negative divergences. So that is a good thing, but we still have to deal with the fact that a lot of these readings are overbought, particularly in the longer term. We have over 90% of the stocks in the S&P 500 with their price above the 200-day EMA. And again, that's a great foundation to keep a rally going, but it also has now moved us into this really overbought area. And as you can see, I've marked cardinal tops, and you don't want to see those overbought readings, and especially like we're seeing now, having them tip over and tip down. So that's one of the ways I read the temperature of the market in general. So let me pass it to you, and you can talk a little bit more about maybe how you read the temperature of the market or the sectors, or however you like to do that.
You bet. Yeah. So let me go ahead and show you a marked up chart. What I tend to use when I'm looking at the broader markets, there are three different signals that I find very useful. And my first is going to pay attention to the index relative to the shorter term simple moving averages. I have a 10, a 21, and a 50. So quite simply, and hopefully I can share with you one way that you can do this, but you want to really just see how extended the price is relative to these simple moving averages. We can see it's a bit stretched here. And from there, I do like to pay attention to the outside momentum indicators. I have an RSI and a stochastic. Before I go further, this is more to tell when the markets are, the temperature is getting cold, if you will. But more to the plus side, I want to look at where this RSI is it entering into an overbought. Erin touched upon this as well. I find the RSI to be quite helpful because historically it can pull back when that RSI gets up there above 70. On the weekly, it's even more powerful when that RSI gets overbought. I use stochastics, another momentum indicator. These are a bit faster than a MACD, for instance. And again, I want to make sure that they are above that 50 in positive territory, but getting up here, and we're currently at 95.5, and that is definitely stretched. We can go back historically. Let's just take a quick minute here, and I'll share with you some of the metrics that can tell you that the markets may be due, at the very least, a pullback. It's going to be those same indicators, but the opposite, of course, the RSI trending below that net neutral 50, the stochastics heading downward and then below that neutral 50. And then this is critical to me, is when the index breaks below, the price breaks below these simple moving averages. And you can see how clearly when we do see these three characteristics occurring simultaneously, it can in fact foretell further downside. And the death cross, that is quite simply when your shorter term simple moving average crosses down below the longer term. And that is a secondary indicator, but it is negative. And then we can see, for me, once this index breaks below that 50-day, you can really get nervous.
Mhm.
But it is going to be, again, these momentum indicators and for me, the simple moving averages. So that is really,
Yeah, and I was thinking about it as you were talking about, you watch what price is doing in relation to those moving averages, like you were saying with the death cross or price crossing below some of those critical moving averages. And really that brings us back, remember, to what I was showing everybody, is that we do this same thing by looking at each individual stock in the S&P 500 and then tallying up, right? How many are holding support at the 20? In the case of yours, I know you use a 21 day. So it's the same sort of idea. You want to see those price support levels holding amongst all the members of the market, as well as looking at them individually, like you're looking at the market right now individually. And it does really say how important those moving averages and price are.
If we have a minute, I can show very quickly one other chart. It's using a service that I use frequently. It's called MarketSmith. And what I did want to point out to you is they have a metric that allows you to see the current price, and you can go back historically as well. We're looking at a daily chart of the NASDAQ, and relative to those moving averages, it's actually highlighted in that box below. And you can see that the NASDAQ is currently 7.3% above that SMA 50. That's highlighted in that box at the bottom. So I'll just take us back to one of the most recent pullbacks back here in October 12th. And at that time, the NASDAQ was 6.1% above. So we are certainly well above. That's that concept of how stretched we are up here. Back here during this correction, it was stretched even further. It was at about 11.5% above the 50, but just getting another sense that we are up here a bit stretched. And Erin, when you said 90% of all stocks are above, I believe it was the 200-day simple moving average. Yeah.
Yes.
Pretty significant. So.
Right, absolutely. And again, it adds that understanding of a foundation. You want to make sure that the market has some foundation to continue higher, but you don't want it to be really overextended. And seeing that percentage about how far away we are from the 50-day is pretty that's pretty interesting.
Eye-opening. Yeah. So we'll keep an eye on that. And then some of those momentum indicators from my work, Erin, and your indicators as well, and stay on top of these markets.
Absolutely. Let's go ahead and take a really brief break, and then we'll be right back. We're going to talk a little bit more about creating a heat map. All right, we are back right now, and we have been talking about how to read the market's temperature. Before we come into our program, we're always interested in knowing what the market is doing and trying to find where the heat is and where it isn't. And so a couple of ways we can do that. I'm going to just go really quickly into my, the way I do a heat map, if you will. And I'm going to start at the dashboard, which is an excellent place to always start on stock charts. And you can come down here and here's your sector summary so we can see what's going on currently as far as today. So, right now, just looking at today's heat map, if you will, we can see where the strength is, but we can also see where the weakness is, the coldness, if you will. And so technology and consumer discretionary, they tend to be a more aggressive sectors, and they do tend to lead the market. And seeing them near the bottom should raise our eyebrows a little. And then seeing some of the defensive areas like real estate and healthcare being near the top does also tell you that, okay, maybe people are getting a little bit less aggressive, if you will, with their investments, and they're going into something a little more defensive. But this is just for the day. So, when we get ready to go do a report or write a blog, we want to know what's been going on for longer than just a day. So I like to come in here and I usually am looking at it in the very short term, which is about a week. And this gives me a pretty good idea of what is going on as far as aggressive or defensive types of investments. Right now, I'm looking at this and it's not telling me a whole lot, to be honest. Everything's up. Obviously, we've seen energy doing well. Financials, I have seen a lot of breakouts going on in there in the bank stocks. I think we even talked about those maybe last week. Mm-hmm. And so I know right now, just going into my heat map, that these are probably the two that I might want to concentrate on when I go and write my blogs or when I'm looking for possible diamonds to present to my diamond readers. And so it's really not too hard to, go in and drill down a little bit. I'm going to just show you really quickly one map, if you will, very visual map, and that is those relative rotation graphs that Julius does. Now, don't get too worked up. This does look a little complex, but it really isn't. It's telling us where the strength not only is right now in energy and in financials, but it also tells you where they're trending. Are they getting better? Are they getting worse? And in this case, as you can see, they're starting to pull over and head toward the weakening area. And where is some of the strength that we're seeing in the intermediate term? This is a weekly version, is real estate. And then we can see, let's see, what are the others here? XLP is still lagging. It doesn't look like it's going anywhere, but certainly financials are starting to pull over as far as the short term. But we can see also some of the improving, which is XLU. So utilities are starting to improve. So healthcare, utilities, and real estate are defensive areas of the market. And this makes sense given the softness and the fact that the market's starting to hit some overhead resistance. So that is my heat map.
Very good. Okay. Well, I will pick it up from there and share with you again. We were just looking at that sector summary, and my work with my MEM Edge report is all about sector work. I want to make sure that I'm fishing in the pond where that heat is, where the strength is, so I can capitalize on that strength. And a study done by William O'Neill talks about industry group affiliation of your stock. 49% of your stock price's appreciation or deterioration has to do with the group and sector that it is a part of. So this is going to be critical. It is for my work. I did my weekly report, sent that out on Sunday, and I highlighted each sector. I talk about it in order of strength. And the first sector I talked about was energy. The second was financial. The third was communication services. So really picking up on this. The reason I'm pointing this out is because then from there, once you get a sense of where that strength is, you're seeing it in the sector. Really, again, from my work, I start my discussion of each sector by looking at a chart. And going into this week, energy was just coming off of a pullback to that 50-day simple moving average. This is a group that I had gotten into, or subscribers, back here in November. Got shaken out from some of the stocks, but we do have nice representation in here. But that's what was catching my eye, was that downtrend reversal. There was definite relative outperformance. And then from there, you will, of course, want to drill down further and make sure that you're in the proper growth group that within. And so we are in both the equipment services and exploration and production. Has everything to do with the price of oil. Crude oil is now above $60. That's huge. And really, because of OPEC, and they are holding up on production. This is actually, it's at 61. This is Brent crude. So anything above 50, these oil guys can start to make money. So it has people excited. Also a recovery play with the vaccine. People are going to be moving around more, traveling more. There's going to be a need for more oil. So from here, you can as you know, if you've watched us, you can, this is weekly, but you can sort it by that scooter and then drill down into some of these stocks that are really accelerating, if you will, and certainly hitting new highs. So that is the energy sector, financials. A lot of it has to do with certainly recovery play with financial interest rates are really quite high. And so Erin talked about banks. This is an area that with my MEM Edge report, I've really been into highlighting some of the bigger names there. Again, we got into it originally back here in November. This is that heat that you're going to want to be on the lookout for when an index breaks above these areas that had been acting as resistance. Take a look at that volume. That's another characteristic we did not talk about, but from my work, if you're trying to uncover and capitalize on areas of strength, you want to see these downtrend reversals taking place on volume. Is there a lot of demand? This gap up here, big volume. So that's another key component that's going to help you, not just on the upside, but if the stock or an index breaks down, if it's doing so on volume, that's really going to be quite telling. So
absolutely. All right, well, let's move on to our next subject here. And that would be uncovering hot coals under the surface. So a lot of things may be heating up in certain sectors or industry groups, and you want to find, obviously, those pockets, as we talk about, of outperformance. And really, that's uncovering something hot that's under the surface. So why don't we go ahead and look at maybe some of the stocks that we're looking at, and then we'll move from there. I will go ahead and share how I was looking at, for some of these areas of strength. And we always talk about the scooter rank as well. And again, we were talking about financials, but I was looking at, let me go back here. I'm looking at my sector candle glance. So I can look at all the sectors all at once. And I like to look at this because I can look at what's going on as far as price movement and those 20 and 50 day, 200-day EMAs. And then I can see what's happening under the surface as far as momentum goes. And you can see that energy, it has had a big move to the upside. It does look like it may be consolidating just a little here, but you can see momentum is just now shifted upward. We just got a crossover buy here that's coming in today. And so I'm kind of interested in the energy sector right now. So I'm going to just double check it and look under the hood for participation, because I do follow that participation even in each individual sector. We were talking about prices above the 20 and prices above the 50. And then of course I have a few others. I do have a special that's coming up on Decision Point on Monday where I'm going to talk about these silver and golden cross indexes. But ultimately, it's great to see the participation that we have right now. The only issue I have here, this is the financials. I said I was going to look at energy. Let's go look at energy. There we go. All right, so there we are. So there's that buy signal. And obviously I showed you financials and we're seeing some of the same action. The only issue I have right now when I look under the surface is while we have really great participation, prices are moving higher right now. And we're seeing a trend that's a little bit lower moving on these. So it might be that we're in that overbought territory and getting ready to turn. However, you can see that when we are in periods of strength or a bull market for that particular sector, you can remain overbought for a very long time. So we have to remember that as well. This will support more upside move, but it also is overbought. But then again, we can stay overbought for a little while. This is just sort of your heads up. BPI has had a crossover and is moving up. I mean, it does look like energy, even though it's getting ready to maybe pause here a little bit, certainly has more energy, if you will, to heat it up.
Yeah, Wall Street finally embraced it. I was talking about it last fall when it first turned. And it's only in the last week or two that many Wall Street firms are finally jumping on board. So yeah, I would say
great.
More upside.
And as far as a hot coal under the surface, and I don't know how under the surface this might be, but the natural gas UNG is just looking fantastic. Right now, you've got a really nice bottoming formation going on, reverse head and shoulders set up. And then even in the intermediate term, and I know people might be getting sick of me talking about natural gas, but I think it's just set up so nicely. And you have a double bottom right here. And this bottom is lower than that bottom. But as far as volume goes, we have rising bottoms on our on balance volume. So that tells you that we have a positive divergence, and that tells me that we should expect a breakout above the confirmation line, which is right there at that support level or resistance level.
All right. I think
that's hot.
Very good.
Give me your hot spot and then we'll talk about something crazy.
Energy. I did share that one name. We can take a look at Exxon as another example of a stock, but they all have this similar appearance. But Exxon did come out with their earnings last week, and they still are supporting a very high dividend. And a lot of these outside metrics are still quite constructive.
Excellent. So you're liking Exxon, maybe some of those others in that industry.
All right.
Perfect. Well, let's go ahead. Sorry, I feel like I took a little too much time on that last segment, but let's go ahead and look at, that happened. Our producer actually found this one, and this is talking about a man. And if you look this one up, he has a tattoo of Florida. Like it looks just like we're seeing right here on the map here of the yellow Florida. And it's right on the center of his forehead, right above his nose.
Yes, not very attractive, but he did, among other things, called 911 to ask for a ride home. I don't think they were too appreciative, but I'm going to go ahead and share my screen. We can take a look at some ride share stocks, and perhaps he can utilize that in the future. The first one up here is Uber, UBER. We're looking at a daily price chart. Take a look. The stock just broke out of this very 6-week base. We can see the RSI is positive, and then the MACD just had that positive crossover up here. So very much in an uptrend. It's all about the gig. We've talked about that ETF gig, but there are some positive things that are occurring for Uber. We can also take a look at Lyft, LYFT, another one really breaking out here. And also in a confirmed uptrend. I like the fact that this MACD is in an early position as far as reversing that downtrend. Really, it was just a period of consolidation. And then one last name that we can take a look at is Garmin. They have the satellite mapping, but they also have a lot of other products that are being embraced by outdoor enthusiasts. And it also has broken out of a very lengthy base and is in a confirmed uptrend with this.
Oh, that looks pretty darn good. I think all of those are pretty interesting candidates with those breakouts, but we have to go.
Yes.
I want to thank everybody for watching, and do have a great rest of your week and weekend. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.